Welcome back. This is Shirley Davis. I'm back to do another video. I'm going to cover my top stocks, but I'm also going to cover some charting information, do some technicals. And today I'll cover these stocks that perform well really quickly. So ticker symbol CMG or Chipotle was up 1.93%. Ticker symbol SHOP was up 0.5%. Ticker symbol NUE or Nucor was up 3.62%. And let's see, Apple was up 1.45%. Now here's a tip. In the beginning, you want to find stocks that can move like 1% a day. You want to try to get this percentage here. Right now it's like 0.90%, but you want to get this percentage to like 3% early on in your trading or buying stocks. Later on, you can let it settle down to 1%. But right now, this portfolio, my Robinhood, is really overbalanced. It's got more Dogecoin in it. And so that's what's keeping this portfolio from going up too much. So you want to find stocks like Nucor or stocks that can move quick. So one of those stocks that have like high swings, it's like SPCE stock or Virgin Galactic. So if we look at Virgin Galactic, you have to be careful because you can catch it really high here or catch it really low here or catch it really low here, and then it'll be back up to 34. See, in a short time, it swings, you know? So that's one of the things you got to do early on in stocks is try to find stocks that have a high percentage for the day. So like this stock right here, Nucor, is swinging up like 3.62% versus like if you did like a AT&T, it's not going to move that much. It moved like 0.98%, not even a percent. It moved. This is more what you call a dividend stock. It's mature, but that's just one of the facts of in the beginning, you're trying your best to get this percentage that you gain every day to 2 or 3%, which means you're going to have to stack it. This portfolio is too diversified. It's got too many different type of stocks in it. But what I'm going to have to do is start increasing my position in stocks like Nucor. I'm going to have to make this heavy because right now this portfolio is heavy in Dogecoin, which Dogecoin is down 30% and falling. So I think one of the subscribers asked, why is this not moving? And it's because it's heavily weighted toward Dogecoin. So anyway, let me go back to the top stocks today performing. Ticker symbol LDL, Lidl was up 85%. And I'm going to probably sell some tomorrow. ZNOG or Zion Oil Company, oil and gas was up 23%. Ticker symbol COP or ConocoPhillips was up 5%. Now I was looking through here and there were some good dividend stocks that were up today. OMF or One Main Holdings was up 4%. I did a video on One Main Holdings on Saturday. Second dividend stock that was up again today, 4% was Prospect Capital or PSEC. This is another dividend stock. So I just wanted to point that out. That I had a few of these dividend stocks that paid out, that increased today. And I'm probably going to keep holding One Main for long term. But if someone tells you about buying dividend stocks, don't expect a lot of growth. So if the stock is trading at $58 per share, don't expect it to go up to $70 per share. It's just the nature Most dividend stocks, they don't move that much. What else do we have up today? Nucor was up 3%. Again, this is part of the steel play. And the reason I'm liking Nucor is because it's down from its high of 110. So I really believe it can get back up over $100. So I believe Nucor is in a buy zone right now because it's under 100, and I believe it can go back to 110, especially once Biden gets its infrastructure deal done or gets closer. So we've seen sort of snapshot, sort of like flashes of greatness with Nucor because it's already gone up to 100 and something dollars per share. Next ticker symbol that I'm looking into is Cleveland Cliffs. I really like to get more shares of this at $19, but I still believe you can buy into Cleveland Cliffs and still make a profit. What else we have? Ticker symbol X, or United Steel. United Steel is down a little bit. It's up on the day, but let's take a look at United Steel as well. So just look over the last 6 months. We're not going to go back 5 years, but the 52-week high is $29 and it's down to $23. I really believe once this deal gets signed with Biden, this will go back up to $29 per share. And if you ever want like more information on like a stocks forecast, you can always go to CNN Money. And like we're just going to go to CNN Money for the forecast for this stock. So this is United Steel, ticker symbol X. And as you can see, it's trading at $23 per share, but the high end is $41. Now in my video, I always mention it's still a good buy zone under 25 because the median mark for what the analysts are saying is it can still go to 31 per share in the next 12 months. They also say, some analysts say, it can go as high as 41 per share, but let's just be conservative and, say, hey, 10 analysts said in the next 12 months it can go to $31 per share, which we know that the $1.9 trillion Biden bill is coming. We just don't know how quickly it's going to get signed, or if they're going to get 1 trillion instead of 2 trillion, 1.9 billion. So that's just something to keep on track of. Is you can always visit Money CNN and check that out. Also, let's go to stockcharts.com. You could type in the symbol and you could take a look at the chart. And as you can see, the relative strength index, it's under. So like right here, this spot is high the stock could go. And even here, it's at $23 per share. It still has relatively good spacing for it to go back up to an RSI of 70. Once it goes past 70, that means the stock is overbought and the stock will come back down. And also, if you're looking at the candle on this, it's got a clear candle and it's pointing in the upper direction. So, I mean, anytime X falls under 25, and according to the 52-week high, I think definitely X is still in the buy zone. So this is stockcharts.com. You can come here and get more information about a stock, and here also on moneycnn.com, and you just put in the symbol of your choice. So if you want to type in CLF or any of the other tickers I discussed, so look at CLF again. It's trading at $20 per share, but it's got a height of a median forecast of $26 per share in the next 12 months. Now the high can go as far as $39 per share. But also from the knowledge and information that I get from CNBC, which says that the company is in good shape, they're paying off a lot of debt, and they're just doing well. So again, you can come to CNN Money and you can type in the ticker that you choose, whether it's Nucor or CLF, and get the next 12 months of information on that stock. Again, Nucor, we know it's under $100 right now, but even the median price target on this is $104. And also it can go as high as $117 per share, according to 10 analysts in the next 12 months. Now, me, I like to keep my stocks for over 12 months because then I'm only paying capital gains on it. But if something is to double or triple, like for example, we had LDL, I'm going to sell right now, some of my LDL, even though it's not even quite a year that I owned it. So, but this is how I try to look at these stocks. I try to buy them at the low end, like, I'm trying to buy more Nucor. I bought some Nucor at, I think, $60 per share, $60 or $70 per share. And I've made quite a bit of profit off it, but I'd like to get some more. And I'd like to get it for the next 12 months. So I think I entered Nucor in around February or March. So I'd still like to get some more. And then I believe it can go back to a high of $110. So that's something we've already seen with Nucor. So back in June 1st, it went to $110 per share. So I really believe it can get back there. And I believe this is undervalued. And also from just, looking at the chart, let's go to Nucor. This may be the bottom right here, $95 per share. And look at the RSI. The RSI is at 43, which means it's got all this gap room. This is when it hit 110 back on June 1st. And this is where it's got all this room right here. So if you're looking to buy Nucor or US Steel X, I think it's a good opportunity to buy some more right now. Okay, so that was technical charting. Here's some other stocks making a move today. Penn National Gaming. This has to deal with sports betting. And it was up 3% today. Penn has a I think it has a peak price of 117, but let's take a look. Okay, so Penn National Gaming. It has a 52-week high of $142 per share and a 52-week low of $26. And let's just take a look at the stock chart, Penn. Again, you can visit here anytime. I see this stock has collapsed from where it was. I mean, just not even, what's this, February? Not even in February, not that long ago. This was a good trading stock, and it's falling through. So again, I really believe with Penn, this thing can come back. And if you just look at it, this is where it should be trading at, right here at 85. And once it gets back up above 85, I think this thing can head back up toward 90 or 100. But that's Penn. Let's take a look at Penn news. Let's see if there's any more information. Maybe there's a catalyst. Maybe there's a state that's legalized it and they're doing business in that state. Should you buy Penn National Gaming stock after it's down 5.13% in a week? Penn gets a bearish score from investors, observers, stock sentiment. This is Investors Place. It's one piece of good news after another for Penn. Okay, this was 5 days ago, so we never know. Okay, Penn will properly press their luck within Penn National Gaming. And on Market Watch, it says Penn National Gaming stock outperformed market on strong trading day. So yeah, if you traded this today and you had 100 shares in Penn, you made a nice, pretty profit. That's a nice little move, 3%. Let's see. Penn falls on Monday. Let's go to the forecast. Let's see what the analysts are saying from the fundamentals. Okay, and now look at this. We need to know what the catalyst is going to pull this stock. But the high on the analyst is saying Penn can go as high as 151, and the median, which I do still believe it can get back to 114. So again, this is Penn National Gaming. It has to do with a lot of the sports betting, but they have not been on the market for too long. So if I go back to, I think they were part of another company, or another company merged with them, but let's see. Yeah, last year sometime, maybe February, $37 per share. So before all this sports betting and stuff started getting involved with that, they were pretty much a $37 per share company. Yeah, it's kind of moved fast in the last year or so. But I still believe once gaming gets open in a few more states, sports betting, I think this stock can take off. Right now, sports betting is only legal in a few states. I believe New Jersey. I know Vegas, but that will be coming soon. So that's Penn Gaming, Penn National Gaming. Let's see. Yeah, but you just have to look around on the news and just kind of study that stock. If you really believe in it, I believe more in Penn than I do at DraftKings. As DraftKings is in sort of the same type of genre. Now, DraftKings is trades around $50, $60 per share, as you can see from the 52-week high of $74, $27. But I believe with the leadership of Penn, which I've seen on CNBC before, I think they have a stronger case. But right now, the space of gaming is sports bet and gaming is wide open. What else do we have? Ticker symbol FCX is up 2.57%. And we know part of this is part of metals, and if inflation takes off, this stock may take off. This is the copper mining company Freeport-McMoRan. Banking's back up today, but Bank of America usually trading these days around $42 per share. Now, this is a stock you could buy some now and buy some later, because bank stocks are pretty much stay the same. So as you can see, the 52-week high is 43, and the 52-week low is $22 per share. Now, I got Bank of America stock back almost a year ago in August, and I got it, let's see, I got it somewhere around here, $23 per share. So I'm in this. I'm positive on Bank of America stock, but as long as the economy stays in good position, this stock will trade anywhere from 36, 39, all the way up to 40 something per share. And if the economy takes off, the stock will be up a more. So let's just take a quick look, because, like I said, bank stocks are pretty interesting. They're pretty stable. They don't move that much. They do increase once the economy increases. So right now, 12 analysts say the stock can go as high as $52 per share. It can go as low median as $44 per share, and it can go to as low as $35 per share. So that's Bank of America. Like I said, I was fortunate while the economy was down and people weren't buying houses, people weren't shopping or anything. I was loading up on Bank of America. So, which again, you can always come to money.cnn and just check out some of the company's fundamentals. 77 cents per share earnings. They did $21.9 billion last quarter. So there's a lot of good information out there. You just have to search for it and find it. And like I said, this is they do pay a dividend. You look at bank stocks, look at this, 1.81%. I would advise anybody, I don't care if it's Bank of America, Wells Fargo, or JP Morgan Chase, to have one bank stock in your portfolio. So again, we have Cake, ticker symbol CAKE, or Cheesecake Factory, is up 2.32%. What else? Ticker symbol ORC, or Orchard Island Capital. Again, this is a dividend stock. It does pay a small dividend, but I believe it's worth owning right now. It doesn't cost that much. It's only like, I think $5 per share or $6 per share. And look at it, it pays a 14.26% dividend. So this is something to think about. Now, it's not gonna, if we look at this stock over the last 6 months or even over the year, it's not gonna go up to, $10 or double or anything. It pays a dividend. They manage capital. That's what the company's called, Orchard Island Capital. They basically manage money and they pay people a dividend. So that's something that was up today, but I wouldn't pay attention too much to this 2%. I would pay attention more to the dividend, that it has a dividend. I pay more attention to this. That's what I pay attention more on, dividend stocks. And then also, dividend stocks right before they increase, that's something to pay attention to. Sometimes a company will be doing so well that they'll pay a special dividend. So these are some different reasons you can either play stocks for growth. That's like a Twilio. And if you look at the last year of Twilio, it was $212 last June, and now it's $363. This is a growth play. There's no dividend that's going to be paid. They take all the money from the company and reinvest it back into the company. So they don't pay dividend. They don't, reserve money to, pay back to shareholders because they're in the growth stage. A stock like Twilio in a few years will be $1,000 per share. The type of contract and the type of work they're doing, this will be $1,000 per share company in a few years. A lot of people won't know about it. They won't talk about this company enough till it's up to $1,000 per share. And by that time, most people won't even be able to afford it. Afford it per share. They'll be able to buy some, but not be able to buy the recommended, $50 share, 50 shares or 100 shares in the stock, because it'll be out of reach. So that's just something to think about. Whether you're buying growth, you're trying to grow the size of your portfolio, or whether you're just trying to get the dividend and, get paid quarterly, a dividend like 14% with PSEC, or excuse me, with Orchard Capital. The other one that I know pays every month is PSEC stock, or Prospect Capital. They pay 8.22%. But like I said, I would not expect this to stay trading at $8.76. If you look over the last year, it's just suddenly gone up some, but I would still expect this stock to trade, once it cools off, is still back at $5 and some change per share. So that's just the difference between growth and dividend stocks. they don't usually grow that much. I mean, you can look at companies like Microsoft. Microsoft is a dividend stock, but they pay a 0.85% dividend. So they're more in the growth mode. So if you look at the chart over the last 5 years, they're from, you know what, $87 up to $262. They play more of a growth stock. You know, now the great part about Microsoft is they've got a great balance sheet. They've got billions of dollars in the bank. They're really close to Apple in terms of, you know, they have good cash flow. They have good assets. They keep low debt. They don't have a lot of debt on their books. And they're always innovating. They're always creating new products or services. So let's just take a look at their forecast for Microsoft stock. And I bet it'll be $300 or something. But it you know, a company like Microsoft doesn't even have to move. It's such a quality company that when you hold it, you know you're holding something of value. So if we just look at Microsoft, the 52-week, the current trading value is $262, but the projected 12 analysts say the stock can go as high as $340. And then the median group of analysts say the stock can go is median at $298. So even if I was looking at this stock today and I was going to buy, you know, 100 shares, and I was looking at the profit between 260 and 298, that's about $30 per share. That's 100 times 30. That's about roughly $3,000 worth of value there. And I mean, this is Microsoft. This is a high quality company. You can see last quarter it did $4.1 billion in sales, and it actually made $1.91 per share. So that's Microsoft. And let's look at the technical analysis too. Let's look at what Microsoft looks like on their chart, because again, theirs is going to be pretty solid. Their chart is going to look like Apple. And again, the RSI is relatively in here. It's not overbought. Now it can cool off, as shown here. It can cool off and go to 252, but even it's high, it like even back here, let's see, back here in mid-April, it did hit the RSI and it traded about, actually trade about the same thing, $262 per share. So it may go a little higher right now, up to, you know, 280 or something like that, because it already hit it back here at let's see where. $263 per share. So if I was to buy Microsoft, I'd let it come down a little bit to 252. But either way, you're getting a solid company. So just be mindful. This is a nice little line here, the RSI, and this will tell you when the stock is overbought, and when it hits this 30 RSI or close to this 30, that's when it's underbought. That means it's not a lot of volume going through. And once it crosses this 50, that's when it starts to become overbought. And it's called the Relative Strength Index, RSI. And so if you need to think about this when you're entering that stock, you know, look at the 52-week high, look at the 52-week low, but also look at this RSI, see if it's bumping up against this or it's, you know, mid here. So that's just more information. Try to help people make wise decisions when they're buying stock. Again, we have Ford stock, which is a good EV play. It has been in the growth mode. They don't pay a dividend right now. But I think Ford is going to be a big part of the EV world in the next few years. They've got 2 or 3 cars out, like Ford, ticker symbol F. And in the news, here's what we need to see. Ford, this is the new F-150 Lightning. Yeah, the F-150 Lightning and the F, as Ford Pro means for Ford stock. So that's a good thing. You're looking at a company, they're coming out new products, you know, new services. That's when you want to get in before that actual product is delivered. But like I said, they've got a lot of orders for Mach-E pre-orders. Ford builds more Mustangs Mach-E's than regular Mustang. Demand source for Ford's electric F-150 Lightning, 100,000 pre-orders, and that was a week ago. So this stock has range on it. Let's just take a look at Ford. Let's look at the next 12-month analyst position on Ford. Okay, so the analyst, 19 analysts offering 12-month forecast on Ford say the stock can go as high as $18, and the stock is, you know, it's right where it's actually supposed to be. It's at $16 per share in the middle. And then they say it can go as low as $11. Now, if it ever drops to $11 per share, I would definitely be buying up some more Ford shares. But I think right now it's just going to stay right around that $14, $15 per share. So that's Ford. I mean, this is something else. Once more of these cars are put on the road, it's going to be over a year from now or 2 years from now. Once all these $100,000 pre-ordered cars are on the road, that stock is going to kick up. I would not be surprised if this stock goes over $20 per share. But you have to wait till the information comes out. And the way you monitor it, like, is each quarter they have what they call earnings call. So every 3 months they have an earnings call, and they tell how much their guidance tells you the stock is going to probably do, and they tell you what they did the previous quarter. So again, let's see, Ford earnings date. Okay. Next earnings date. Okay, it says Ford Motor Company is estimated next earnings call is on July 29th. And so that's just the estimated date. The company itself can decide whether or not they're going to, release earnings on this date, but it'll be around that date, and it'll be on the news too. They'll let you know. If I was just, I wanted to do my own research on Ford, Investor Ford. I'll just go to investorford.com. Well, in case it's your shareholderford.com, and I can go back every quarter if I wanted to. Let's see, go to events and presentations. And it says up and coming sales. It's July, so they sometimes actually release more information during a year than just the earnings call. They may release a new product. They may make a statement of some sort. This is June 17th. It says Ford CEO speaks to Deutsche Bank virtual conference. Okay, so they spoke and they had a web. You can actually dial into it and hear what Ford shared with Deutsche Bank about what they thought about the global industry. And so, but I usually go here and just go back for the earnings call. So.
All right, so good afternoon, everybody.
So this is something that big companies do. They reach out to their biggest stakeholders and they do different presentations about the product or service that they have. And like I said, I got this from shareholders.ford.com and then investor events. And every company has this. So like if I go to ir.tesla, which is an investor relations Tesla. They do the same thing. They have the same information. So I can go here and go back and I see, look, earnings date. I can go back and I can listen to it. They don't all have videos like this forward presentation, but I can go back and get as much as information about that company as I like. You know, I can get earnings calls. I can get, you know, if they sometimes they just end up releasing Ford discusses 4 core earnings that let's see, Ford, this is back in March, Ford CFO Brian Schaaf to speak at JP Morgan Global High Yield and Leverage Finance Conference. They put that on their website. So there's no limitation on the amount of information you can get from a company. And if you're investing in something, it's best to do your due diligence. So I think I overloaded you for the day as far as information and how to research a stock and how to also do some fundamental analysis. But if you like more of this type of content, please leave a comment below. And I just want to thank you for watching. Thank you for listening. And we'll see you on the next video.